Hi, and welcome to today's Engaging for Missouri webinar. I'm Alice Roach from the Division of Applied Social Sciences at the University of Missouri, and I'll be your host today. With each of these 30-minute webinars, we intend to share research-based insights that leaders like you can apply in your own work to benefit and strengthen the state's agriculture and food system, hospitality sector, and communities. Today, Ben Brown will present about the Biden administration's approach to agricultural policy. But before I invite Ben to begin, I want to share a few housekeeping notes. First, we'll close today's webinar with a question and answer session. Those of you who connected today via your computer may submit your questions in the chat screen. To open the chat, just click the chat icon that you see at the bottom of your Zoom window. If you joined today by phone, then you may email me your questions at roacham@missouri.edu. Second, all attendees are muted and may not start their video. Third, if you encounter any technical problems during the webinar today, then please let me know by either submitting a comment in the chat screen or send me an email at roacham@missouri.edu. And last, we will make a recording of today's presentation available. You can look for an email from Zoom that shares more about where you can access that recording in about a day from now. You can also find an archive of all of our previous Engaging for Missouri webinars on our Division of Applied Social Sciences YouTube channel. So with that, we'll transition to the topic of today's webinar, which is titled, What Changes for Agriculture Under a Biden Administration? Presenting is Ben Brown, who's a Senior Research Associate in the MU Division of Applied Social Sciences. So thank you, Ben, for presenting today. If you could please unmute your microphone and start your video, then we'll begin today's presentation.
Thank you, Alice. I really appreciate it, and I look forward to today's program, but I hope this is the first of many with you and others within the college. And then good morning to Missouri's agriculture community. It's wonderful to be with you. I hope you're staying warm on this chilly and brisk Missouri winter morning. I'm relatively new to Mizzou, but I'm not new to Missouri. I grew up in West Central Missouri. My family still operates a farming operation there. And so very excited to be back here in the Show Me State. I'm excited to be with you all today, talking about a very broad and in some ways challenging topic today. Alice asked me to talk about how agriculture looks under the Biden administration. And I think there's several ways to go from this spoke, or several spokes in the wheel here. We're certainly not going to be able to talk about all the topics within the time frame, but if you do have further questions, please put those in the chat and we'll make sure we answer those, get that to you in some way, shape, or form. So I want to start off with this slide. This is the same slide I always started with my ag policy students when I taught the ag policy course at Ohio State. And it's really the role of how ag policy is made. Ag policy at sometimes is not logical, but it certainly is practical. And what I have found is that these four questions have to be asked during some part of the process for policy to eventually reach a conclusion. It starts with what is our current landscape? And this is based on scientific observation. The next question is what can be? What is possible in the universe, or what is possible in the political realm? This infers politics due to political appetite, the characteristics of the legislators themselves. What will be based on economic forecasts, knowledge of if this happens, what will be the result, and then what should be. And this is where value judgment comes in. We've all been brought up with our own set of values and influences of what we think is right or wrong, and this is where the final product of what should be comes into play. And so, when we start thinking about public policy, everything starts with an issue from a constituent level or from an organizational issue. It goes through three stages or three different forms of analysis, whether that be based on facts, values, or myths, and then it eventually becomes public decision. And public policy ultimately has to rely on three factors, or where economics, ethics, and policy come together. And it's that part in the middle there that I'm pointing to that determines if policy will be made, or what policy will eventually enter into the spectrum. The smaller that middle part is, the more contentious an issue might be. And there's different factors that ration all three of these components. For economics, it's price. Will it pay? For ethics, is it ethical? Is rationed based on conscience? And then the third part, politics, is it popular? Can we win votes? Can we get reelected in some cases based on that? So again, it's where the component of all three of those come together that we eventually get public policy. I want to start off with a couple of policy thoughts, and I have to give credit to my boss, Pat Westoff, kind of for this slide. It's something that, I think when we think about policy, we're aware of these channels, but Pat wrote it in a Columbus Dispatch article a couple weeks back and did it so articulately. I thought I'd include it in here, but there's ways that policy development can impact what we eventually get in food and farm policy. And it's not only just the initiatives of the legislators themselves, but how that policy becomes law that also matters. Probably the one that comes to everybody's mind right off the bat is that legislators write laws and that they get passed and signed by the president. That might seem easy when Democrats hold both the White House, the House of Representatives, and then the tie-breaking vote in the Senate with Vice President Harris. But they're going to have their own troubles. And we'll talk a little bit about this when I get to my Congress slide. The second process is something that we're becoming very familiar with right now, and that's through a process called budget reconciliation. This is how the administration is currently moving the latest coronavirus assistance package through Congress. There's a couple of pros to this. One, it only requires a simple majority. So you only need 51 votes or 50 votes in the tie-breaking vote in the Senate. You don't need the normal 60 or at least no Republicans filibustering it to get a bill passed. This is something that's been used in the past. It was used by the Obama administration to pass some healthcare initiatives or their healthcare law. It was passed by the Trump administration for his Tax Cuts and Jobs Act in 2017. So it's certainly not new. In theory, there's only one of these a year. But I think when we start thinking about climate legislation, is this a vehicle for passing laws in the future? And then the third process is through executive order. And this is something we've also become familiar with as of recently. And I think is certainly a quicker way to get some action passed. But I want to dive a little bit deeper into that. First, when I think of President Biden, he reminds me a little bit of President Ford from the standpoint. By the way, I'm a very big presidential nerd. I love reading presidential history. And Biden reminds me a lot of President Ford. Ford spent 24 years in the House of Representatives, served in the majority role in the House of Representatives before becoming vice president and then president. Biden has grown up in the Senate, spent 36 years as the senator from Delaware. And then he served 8 years as vice president, which effectively, which makes him president of the U.S. Senate. And then, in the last couple of years has been out of the public office, but still has very close ties with a lot of friends in the Congress that he will rely on to come up with bipartisan legislation. And he has traditionally had a very favorable bipartisan scorecard from the time he was in office in '93 when they started the scorecard to when he came out to be vice president in 2008. So I do expect Biden to have a bipartisan agenda. Now I realize I'm saying that at the same time that he basically is saying my line in the sand is that we will have a coronavirus assistance package here soon, and that it will contain $1,400 per individual. And I'm not moving from that, even though several Republican senators have raised concerns to him. He met with them, but he seems to be taking his own direction. So I realize that, by my comments about bipartisanship might not seem as sincere given what has happened, but I do expect him to have friends and move through the process at a relatively, at least bipartisan manner. So my biggest concern, and I guess this is kind of my second point, is that in general, I think our policy here in the United States is starting to move towards imperial presidents, and it exists in both parties. And what I mean by this is that each president comes in and immediately undoes what the previous predecessor or the previous president did. President Trump came in and undid everything President Obama did. Biden's coming in and doing a lot of the same things that President Trump put into place. A lot of this is through executive order. We've certainly had a lot of talk about the speed of President Biden's executive order use. I'd like to remind folks that President Trump was, in modern day presidents, used the executive order the most during his 100 days, his first 100 days in office. Biden's certainly on pace to break that and even exceed, at least right now, FDR, Franklin Delano Roosevelt's record executive order use. So my concern here is that when we think about the power that the executive branch now has, whether that's through the presidency or most likely and more realistically through his cabinet appointees, we end up in this cycle where the legislature has given their power a lot to the executive branch. The executive branch makes a decision, and then they get sued in the judicial branch for executive overreach. And we allow the judicial branch to actually set some policy and some laws. My concern isn't that we need a call for unity. We've always been a country where we've gone somewhere else because we didn't agree with somebody. Literally, the reason the United States is here is because we didn't like Great Britain. The reason my family's moved to Missouri from Ohio is because we didn't want to live in Ohio anymore, and we homesteaded to Missouri. So we've always, had this trouble with unity. But where I'm concerned is our ability to compromise and have respect for a different point of view seems to be lost. My old ag policy professor, Barry Funchbaugh, used to say, compromise is not a dirty word. But it certainly seems to get treated like that a lot in Congress. I told you I'd talk a little bit about Congress before we get back into the Biden administration. I think one of the interesting things for Congress right now is how they govern with split majorities or split parties, pretty much right up and down the middle in both houses. The Senate is split by the slimmest of margins, 50 Republicans, 48 Democrats, and then 2 independents that side with the Democrats. That gives President Harris or Vice President Harris the tie-breaking vote in the Senate. The House of Representatives is also very close. The margin moved much closer to an evenly divided House of Representatives. What that means is that Chuck Schumer, the majority leader in the Senate, and then Nancy Pelosi, who is the Speaker of the House, their hope is that all of their rank and file members fall right in line, that the ducks are all in a row. The reality of the situation is every person becomes a king or queen maker, an interchangeable term there. Meaning that they have the power, that their vote really does matter. And the reality is that they're going to really struggle to govern, at least in that partisan manner, because there's several representatives and senators in both parties that are willing to compromise and are willing, have their policies and positions that they're going to say, hey, if you want me to vote for this, I'm going to need something in return. And so there is a lot of power right now in Congress for bipartisan issues, and I think it drives some of these issues to the middle. The second thing that I think is of interest is when we look at the 2020 Senate election. Some of you are rolling your eyes because you're like, we just finished the election. Why are you talking about the next one? The reality is that the election starts the day after the previous election. So we are now in the 2022 election cycle, and Republicans will have several seats, 20 seats in the Senate that they will have to defend compared to the Democrats' 14 seats. The interesting thing is we've got several senior Republicans that have already announced that they will not be running for re-election. So 4 incumbent Republican seats are going to be open seats. A couple of them, Pennsylvania and Ohio will be highly competitive districts. North Carolina could be highly competitive Senate race. The interesting one is Wisconsin. Ron Johnson, the senator from Wisconsin, said that he was going to finish after 2 terms, meaning that he would be done in 2022. He's now starting to backtrack some of those comments. So we could see another really competitive Senate race open up in Wisconsin if he does, in fact, decide to call it quits after 2 terms. And then this brings me to my second thought. And this is kind of the broad topic that I think maybe is my take-home message for today. USDA, the Department of Agriculture, in my opinion, and again, this is me just kind of saying what I think will happen based on some observations, and I'm happy to back up these thoughts, but USDA will hold a high priority under the Biden administration, but it's going to look different, where that priority and emphasis is going to look different than under the Trump administration. President Trump had a relatively interesting relationship with USDA, and I think just farmers and ag groups in general, because his view of USDA was to support farm incomes. And it didn't matter what else happened as long as farm incomes were steady. So that could mean, an influx of government cash payments. And we'll talk about this a little bit later. President Biden seems to be taking a more general and diverse approach to USDA. So a couple of things I think start to pop out of this is that he sees USDA as a way to do vaccine distribution and to support rural healthcare. I think that's going to be top of mind. I think he looks at USDA as a way to help with domestic and international food aid and distribution. The international component there is important. I think he looks at the U.S.'s role to help international communities that suffer with hunger, especially related to COVID, but even prior to COVID, there was a lot of communities that were really suffering with poverty. I think he looks at USDA as a way to support that agenda. Climate change is inevitable. I think it was going to happen before President Biden got elected, but then with the Biden administration and Democrats holding both chambers of Congress, I think climate change is just, it's going to happen. We're going to see action in that space. I also see him treating USDA as a way to help with rural economic development, whether that's through infrastructure and broadband, whether that's through access for small business administrations. or small business organizations through biomass production, plastics, low carbon fuel. I see him using USDA in those manners. Farm worker protections is a priority of Vice President Harris and something that she supported as a senator from California. And then finally, indigenous and minority farmers. And we've already seen this start to pop up. There's a proposal of about $5 billion in this latest coronavirus assistance package to help with these indigenous, minority farmers, Black farmers who, folks in USDA really want to signal have been hampered or hurt by previous policies. And I look for them to receive significant support under this administration. So is this out of the realm of where USDA has been in the past? I'm sure you've all seen these charts of where USDA outlies and spending go. But a big part of it is through nutrition assistance. And this was something that the previous administration really tried to rein in and focus more on that direct farm support. As I've mentioned, I see President Biden really using USDA for multiple different things of his economic agenda. That's good because USDA will receive a priority position within his cabinet. But I think for production agriculture, this means that our previous policies all focused on production agriculture, whether that was through income support or some of the other policies that President Trump put into place, might not be at the top of the pecking order this go around. So we don't have time for everything in 20 minutes, but I want to talk about a couple of things. One, there's just things I don't know. I am not a medical doctor. I do not pretend to be a medical doctor. I will not talk about where I think we go with COVID or what should be done with COVID legislation. This is just a policy I treat myself. I just follow the rules and I try not to suggest what should be or what should be done with that. We're going to talk a little bit about ag trade under President Biden, the farm safety net, and then agriculture's role in climate change. So let's start with COVID. There's, as I mentioned, just things I don't know. I don't know when COVID's going to end or what it's going to take to finish off the virus here in the United States. I certainly don't know what regulations will be needed to reach that, or if it'll just burn off when the weather turns warm again. I don't know those things. I don't pretend to know those. But one things I do watch is how it relates to regulations. Daily cases of coronavirus have fallen. You can see the 7-day moving average there in red in the top graph. They continue to fall and are about half of where we were at the peak at the beginning of January. The interesting thing is daily death counts have not fallen. They've been chopping pretty much sideways for the last several weeks. And when you look at the record daily death counts we witnessed last Thursday, it is concerning. And that does seem to be the main measure for regulation, stay-at-home orders, schools taken virtually. And that does trickle over into our economy. And this just shows, this is a tracker by the Oxford COVID-19 government response tracker that shows government's response to coronavirus through stay-at-home orders, regulation, federal stimulus spending, what have you. The darker the blue, the more regulations. And it's a time series all the way from January of last year through this past January 20th. In the United States, our government response was spiked back in the last April and has maintained pretty consistent levels since then. I did see last week that Iowa's governor reversed all their COVID restrictions and that they have started to move away from any type of restrictions at all. But certainly as a country, we have maintained pretty flat. The reason I bring this up is because no matter what a politician comes in with for his platform, there might be, and usually is, one event that completely changes the course of their governing. For President Bush, it was, the 9/11 attack and then the war that followed. For President Obama, it was getting out of the housing crisis and the Great Recession that really defined his presidency. For President Trump, it's been coronavirus. So, President Biden's coming in with a lot of initiatives, and the question becomes, okay, can he actually get to those policies, or will we continue to work through COVID-related issues over the future? I just throw this up here as the outlook for global GDP is put forth by the OECD from where they were projecting in November of 2019 to where their current projections are. And their expectation is that it's going to take a while to get back to growth, and that the growth is going to remain slower. But there's huge positive risk and negative risk. So basically a downside scenario and a upside scenario. The interesting thing is, we haven't really seen any indication of where that goes here throughout, but where this fits into agriculture is we have lots of service sectors that are really struggling. And luckily for us, meat demand has not really faltered off because people continue to buy meat at the retail level. But when we look at restaurants, the index for expectations of the current situation and future expectations signal that producers or restaurant owners are worried about the current environment, but they're optimistic about vaccine rollout, and people returning back to eating at restaurants or at least takeout in the future. That's what the index on the right shows us. This is going to depend on several things and does have big impacts in terms of the restaurant sector. So it also feeds into gasoline demand, which then ultimately turns into ethanol. This is just weekly implied gasoline use. The yellow line there is 2021. We remain 13 to 15% below year ago levels. To this point, you see the big drop down there last April and March as we shut our economy down and people reduce driving. That also plays into ethanol, and ethanol represents a portion of gasoline demand. And so we continue to see ethanol production and consumption behind year ago levels based on those lower gasoline projections. So federal stimulus as a result of this does impact commodity markets to some extent. When we pump more dollars into the US economy, that puts more dollars floating around in the world. We've increased the supply of dollars, and that tends to weaken our dollar. History would say that all stimulus packages weaken the US dollars. We add more dollars into the world economy. And that's what I'm showing you here is just the index of the US dollar compared to other currencies around the globe. We're on pace to pass another $1.9 trillion stimulus package in the next few weeks, and we continue to see downward pressure on the dollar. The dollar rose at the beginning of the pandemic as people, and other currencies flooded the market asking for US dollars because they deemed it a safe currency. But now we're seeing the reverse happen where we're adding more supply to the market. This feeds into the commodity sector. Partially because our commodities are export dominant. We depend on export markets for the majority of our commodities, and the majority of our commodities have a significant share of their production go into the export market. So one of the measures I follow, or one of the indexes I follow, is the Thomson Reuters Core Commodity Index. It's equally weighted by the commodities that you see there on the screen, and it's heavily weighted toward agriculture and livestock. And when we look at what the commodity markets have done, they have mirrored. There's like a 90 or 0.9 correlation rate with, or inverse correlation rate with the dollar, meaning that when the dollar falls, this index rises. And that's what we've seen. As the dollar has fallen, the indexes rise, largely driven by those economic signals of export markets. So when we talk about trade, one of the big things I think people are asking is what stays under the Biden administration from that phase one trade deal we had with China that President Trump signed into law a year ago, last January. Certainly, we had record amounts of exports of agriculture products from the United States. And you can see this is a Peterson Institute graph there of what their actual commitments for the year were and what the commitments they did have totaled. You'll see we fell below all of those. The question now becomes, does President Biden enforce this? Have measures of retaliation against China for not meeting the agreements? My expectation is not. I think he will remain tough on China, but it's yet to be seen how this phase one trade deal fits into his policy. He says he's not reversing the tariffs, but I also throw out that I think the non-tariff barriers in the phase one agreement were more important to U.S. agriculture than the actual commitments of purchases. When you look at beef and reversing their age limitations, when you look at dairy milk and powder into infant formula, those all had significant impacts in terms of what China was able to purchase this year that contributed to some of that. So here's where I see Biden's trade priorities being. The first priority is a primary focus on the domestic economic agenda. We're hearing some of the same rhetoric that we heard under the Trump administration of Make America Great. Now it's just Build Back Better and Buy American. Really putting an emphasis on improving our wages for domestic manufacturing, improving our competitiveness on the world market, helping with tax credits for companies, and helping with education. I think all those fit into this first priority. The second priority is the reversal of the go-alone trade policies that we saw under the Trump administration. No more are we taking on countries by ourselves, but working with others. President Trump, on his third day in office, pulled us out of the Trans-Pacific Partnership. I think Biden could re-engage us in that. That's with several other Pacific Rim countries, the largest being Japan and others, that allowed us to remove tariffs and have a playing field that was appropriate to all buyers. We've struck individual deals with a lot of those countries: Japan, Korea, Mexico, Canada. But I do expect a more multilateral approach. I expect Biden to strengthen the World Trade Organization with a meaningful appellate body reform that was being attacked prior to President Trump, all the way from President Bush and Obama. There was concerns about that appellate body, and I look for President Biden to work within the WTO system. But then I'm not expecting any new trade agreements. I think President Biden really wants to focus on the domestic economy, and any new trade agreements or expansions to trade agreements will have to abide by labor and environmental enforcement. And I expect there to be large conversations about environment standards, even for high emitting carbon countries, even maybe a carbon fee. So one more topic I want to talk about is farm income. Certainly, we've seen an increase in government payments fitting into farm income. Last year reached a peak of 30, or not a peak, but a spike of about 35% of all farm income came from government assistance. I think this fits into the Biden administration more as a carrot rather than a stick, but some might view it as a stick, that if you want government assistance, you're going to have to match a public good, meaning that these are public dollars, and the public is asking for things like carbon neutral or more cover crops. I think we can expect more regulation tying environmental procedures to farm income and through compliance is what I'm expecting on that side. So I think there is an applied policy question given the large ad hoc payments and assistance that we've seen. Is it the current federal safety net is not meeting the responsiveness or the effectiveness sought by U.S. policymakers? And then given that we've seen now livestock programs through the Coronavirus Food Assistance Program, and even some ways MFP, Market Facilitation Program, what does the future look like for a livestock safety net program? I think these are questions that this administration will have to answer. I look for Biden to focus in on farm income and global competitiveness. Basically, how competitive are we on the world market? One of the interesting things is through these large support programs, we've put a floor under cost of production. This just shows the impact of farm returns with payments and without government payments. The red line is with farm payments, the black line is without. I'll draw attention right there in the middle. That is early 2000s when we were seeing record net returns without farm payments turned into break even or even slightly better returns with government payments. When we look at what that did to cost of production, land values did not fall during that time, nor did we see crop input prices fall during that time. So we've put an artificial floor under our cost of production. When we start looking at other countries and how we compete with them, I think that's going to be a question that has to be addressed, is how does our safety net accurately reflect the needs of the farming sector while also helping us be competitive in the world market? I'm going to skip this slide just in the nature of time because I'm going out. But basically what I was trying to say here is there's several ways to support farm income. And we certainly heard a lot of different measures proposed by 2020 presidential candidates on both sides of the aisle. But what I'm expecting is us to stay with these income support measures through ad hoc programs and other direct payments, but with more conservation compliance added to them. I'll draw attention to this slide just real quick because this was a poll that Purdue University with their Center for Commercial Ag put out in terms of what was concerning to farmers over the next 5 years. And more environmental regulations and taxes both showed up. I do think regulations will become something that we will have to watch, and I do expect at least more concentration on some of the regulations that President Trump reversed. I think we have a different philosophy on that now. The tax programs are interesting because certainly nothing has been introduced for taxes in this current Congress or by President Biden, and so the only thing I have to go off of is what he talked about on the campaign trail. I do not expect any type of tax bills probably here soon or in this first year, just from the standpoint that we're trying to figure out, or the administration's trying to figure out how to help people recover from COVID. And certainly they aren't wanting to take money out of the economy. So certainly I've got a couple of things listed there that I think are important for agriculture to be aware of and to, just pay attention. But we'll see. We'll have to see what happens. So I'm expecting something between the tax reform prior to 2017 and where we are at today. I think we'll see a middle ground there as well. So I see Alice's camera come on, and I know I'm running late. So I'm just going to jump ahead to this slide right here, and I'll finish up here. There's been a lot of talk about carbon and climate change in all phases of government. It's something that has really picked up in the last couple of years. I'll just point to this slide to say that we hear and talk a lot about government control when it comes to carbon neutral, but private companies have really jumped on this bandwagon. And as a result, a majority of our ag companies now also have carbon reduction plans as well. And so it's being driven by their customers asking for this by their businesses. And it's also being driven by investors saying, we want to support and invest in businesses that are reducing carbon. And so there is a private push for this within the carbon neutrality and carbon reduction world. Certainly we have the Paris Climate Agreement where the majority of the world fits into this. And by the United States re-engaging in that, we're signaling to our businesses that they can compete in the global market by having a government that's backing them. So certainly, everybody wants to talk about how politics are pushing us this direction. I would argue it's individuals and investments that are pushing us this way. And it's not a negative for agriculture. It definitely seems to be a positive that it's a carrot and not a stick. Net zero does not mean no emissions. It just simply means we have to offset those emissions with some other form of carbon offset. And for agriculture, we have a great story to tell there, whether that's through biomass energy or sequestering carbon in soil or trees. And so, I think there's great opportunity for that within agriculture. I've got some impacts here. I think Alice is going to share my slides. And so you can look at these. But, when I get to my takeaways, I think USDA has a new identity under President Biden, a more broad, more inclusive approach outside of just production agriculture. Certainly, that has its pros and cons, but that's just what I sense from this administration. I do not think it's a completely new trading environment as maybe a reversal all the way back to the Biden positions on trade, but I don't think it's the Trump administration's trade policies either. And so more transparency can be beneficial for agriculture. A stronger dispute mechanism for places like Mexico, where they're now talking about banning some pesticides and GMOs. Those will be important as we move forward. And then I think just the approach on climate change is a question of how big, not if. I think we're there, and I think agriculture will be increasingly asked to track carbon emissions and figure out ways to capture that data within their operations. And it could mean opportunities for financial profit by doing these types of things. So with that, I appreciate your time. Thank you. I have gone 3 minutes over, so I do apologize for that. And if there's any questions, I'm happy to answer those. And if you've got any questions that I didn't talk about, and I know we went through a lot of things really fast, you're welcome to email or call me there. So with that, Alice, I apologize for going over and thank you for your time.
Thank you, Ben. We are past time, but I'm just going to ask Ben to stick around and address a couple of audience questions. So you do have those answered. A couple of attendees had questions about the CCC, including the possibility for CCC funding to be used for non-agricultural priorities and a carbon program, and also the potential to increase borrowing authority. So what are your thoughts about these proposals, and then also their potential impacts on agriculture?
Yeah, that's a good question. So certainly, the Credit Commodity Corporation has been a policy that has, in a lot of ways, been used more liberally over the last few years, finding new ways to use those dollars. It's an interesting way to kind of circumvent congressional appropriations or having congressional approval for things. The question now becomes, did the previous administration overstep that? Because there's certainly a lot of legislators that have reviewed that and have wanted that authority to kind of be reined in. So it'll be interesting to see if that changes. But as mentioned, there's been a lot of interest in using those funds for a carbon bank. I'm no lawyer. I think I have my doubts if they can legally use that for a carbon bank. They might have to be real creative on how they step it up. But I was once given some advice that I think is very appropriate here. Congress can do whatever they want by passing a law and making a change. And so just because something isn't legally or legal right now doesn't mean it can't be changed or that laws can't be amended. But I guess for me right now is that carbon bank that USDA is interested in setting up certainly provides farmers a legal aspect and a backdrop to make sure that they're meeting some of the standards that companies like Cargill and Indigo Ag and others are starting to push out as carbon markets for farmers. So, it's a regulatory environment that helps put a process around something that's being market driven at the point. So.
Great, thank you. And then one last question: what about Biden's support of renewable fuels?
Good question. I didn't talk about that. I didn't have much time to talk about that today. We could have done a whole 20 minutes on that as well. Certainly, again, we haven't seen any legislation come out about renewables. It hasn't even really been talked about by President Biden or any of his administration to this point. So all we have to go off is what he talked about on the campaign circuit. He showed strong support for renewables during his campaign, and ethanol, biodiesel, all those products during his campaign. It was interesting yesterday, Michael Reagan, who's the president's appointment for EPA to lead the EPA, his nomination was advanced out of the Senate Environmental and Public Works Committee by a bipartisan vote, but there were 6 Republicans that voted against it, largely because they didn't get the clarity on biofuels that they wanted. And I mean this in a way that I have facts to back this up. Michael Reagan is inheriting a mess at EPA from the previous administration because they left a lot of those biofuel decisions to this administration, and they'll have to work that out, and that's going to take time. So I guess my message for you is he was supportive of biofuels, but we're going to have to see in the next couple of months, and I do think it's going to take months, where some of those policies get worked out and what they look like. So.
Excellent. Well, thank you, Ben, for sharing today's presentation, and thank you to our audience. When you exit Zoom, you'll see a post-webinar survey will load in your browser. If you could please respond, we'll use the results to improve the webinar experience and also brainstorm future topics. You should receive a recorded copy of today's webinar plus the slides in your email within about a day from now. I hope you'll join us for future Engaging for Missouri webinars later this week. We'll send our upcoming webinar schedule via email. Again, thanks for joining us and have a great Wednesday. Thanks, Ben.
Thank you.